Taiwan Semiconductor Manufacturing posted better than expected second quarter results, July the 18th. They affirmed guidance to the higher end of expectations and also its capital expenditures for the full year between 30 and 32 billion. The world's biggest foundry is confirming that semiconductors fueled by AI demand isn't going anywhere. Revenue was 20.8 billion, up 10% quarter over quarter and 33% year over year. Gross margins were 53%, slightly better sequentially, but down 173 basis points year over year. Operating profit was 8.9 billion, up 11.7% from Q1 and 35% from Q2 2023. This gives us an operating margin of around 42.5%. Net income was shy of 7.7 billion, up 6.8% quarter over quarter and 29% year over year, which is net income margin of almost 37%. Good, solid results. The 9-quarter income statement bar chart shows us net revenue has been growing by 1.5% since Q2 2022. Gross profits have also been growing by 36 basis points. Operating profit is basically flat, however, but net income is slightly lower by 57 basis points. Revenue by technology for Taiwan Semiconductor publishes their data as a percent of revenue, so we don't have exact numbers, but we can see here in blue the 3-nanometer business is starting to pick up to about 15% of total revenue, growing 67% quarter over quarter. The 5-nanometer technology continues to be 35% of revenue, slightly down quarter over quarter, but up 17% year over year, and it's been growing by 5.8%. The 7-nanometer business is slowly declining, where it was once 30% of revenue in 2Q 2022, is now just 17% this quarter, contracting 10% sequentially, 26% year over year, and 6% in the last 9 quarters. The 16-nanometer business is also contracting, having been 14% in 2022, down to 9% this quarter. No change sequentially, but down 18% year over year, and it's been contracting by 4.8%. Taiwan Semiconductor has other nanometer data, but we chose not to publish them given they are just less relevant. Let's look at revenue by platform. High-performance computing, which is the backbone of generative AI, grew 13% quarter over quarter, up 18% year over year, and it's been expanding by 2%. High-performance computing comprises 52% of total revenue, a testament to the ongoing investment in machine learning. Smartphone chips were 33% of total revenue, down 13% quarter over quarter. No change year over year and down 156 basis points since Q2 2022. It's possible the absolute revenue number has grown, but a sign that perhaps iPhone demand is soft. Internet of Things was 6%, no change quarter over quarter, down 25% year over year, and it's been contracting by 3%. The automotive, digital consumer electronics, and others didn't add much to the overall Taiwan Semi bottom line, so we left them out. Let's go to revenue by geography. We can see here in blue, North America is TSM's biggest market with 65% of total revenue, down almost 6% sequentially and 152 basis points from Q2 2023. Remember, overall revenue grew 10% this quarter and 32% year over year, so actual numbers are likely up. China's revenue market share grew to 16%. It is not clear if China is buying chips to fulfill contracts with their global customers or for internal use, but that segment is growing. APAC made up just 9% of revenue. That's up from last year, but down sequentially. Japan, EMEA were 6% and 4% of total revenue, respectively. Well, what are the fundamentals looking like? Per share values are based on the ADR, which is 5 TSM shares. Earnings per share were $1.48, up 6.8% and 29% year over year. The PE for Taiwan Semi is 30.7 and the S&P 500 is 29.2. Compared to the semiconductor market at large, this is a low PE. Check out our semiconductor industry comparables report for more information. Sales per share were $4.01, better by 10% and 32%. That's a price to sales of 42 times. Book value increased to $22.70, better sequentially and year over year. Price to book value is then 7.6 times. Cash per share is $10.70, also improved, giving us a price to cash of 16 times. TSM has some marketable securities, giving us $12.16 per share, including cash, and a price to cash plus marketable shares of 14 multiple. Leverage ratios put the debt ratio at 0.16, equity 0.25, and interest coverage 43 times. Liquidity ratios are strong with the current ratio 2.47, the quick ratio 2.15, and the cash showing 1.72. Good, solid liquidity. Return on assets was 16.6% and return on equity 26%. The equity multiplier of TSM is 1.6. Return on invested capital is 26%, where the effective tax rate of TSM is 15.6%, producing a NOPAT of 37.2 billion, and the average debt plus equity is 142 billion. Cash flows are the 6-month figures. Operating cash flow is 25.5 billion, up 41%. Investing outflows were 11.2 billion, financing outflows 5 billion, and free cash flow to the firm stands at 56 billion, not too shabby. Price to free cash flow is 15.7 times. TSM pays a dividend of 54 cents, which is a 1.26% yield, growing 20%, paying out close to 37%. The firm's enterprise value is 862 billion, which is 11 times multiple to revenue, 16.5 times multiple to EBITDA, a 27 multiple to EBIT, and 15 times free cash flow. Taiwan Semiconductor provided guidance that was improved. They're expecting revenue to come in between 22.4 to 23.2 billion, with gross margins of between 53.5 to 55.5%. Operating margins between 42.5 and 44.5%, giving us an EPS between $1.53 and $1.66, and a forward PE of 29. Key takeaways from the report. The pro side shows the chip industry is still growing and there's lots of demand with increased revenue and capital expenditure both up at TSM. The company has a lot of cash and free cash flow. The dividend is good and there is room to increase it. On the con side, the U.S. trade dispute could be problematic for TSM and semiconductors as a whole. The U.S. put tariffs on electric cars from China. Integrated circuits could be next. Other than that, we don't see much else wrong with Taiwan Semiconductor. That being said, we're giving TSM a buy rating. We have no exposure to this company. Like and subscribe.